What's going on, everyone? So this setup, it's technically bullish, but it's not the most bullish setup. So we currently went long some SPY calls, right? And what I really wanted was I wanted a close, but you know what? I'm going to talk about that in today's video. So we're going to go over the SPY, the NASDAQ, the IWM, the crypto markets, the large tech stocks, and the 30-year bond. All right, so let's get right into that now. All right, so here's the SPY. When I alerted the calls, we were trading above this high, which is 438.20. And a close above that level would have been extremely, extremely bullish. At that point, you take the calls and that's it. But instead, what happened was we fell down a bit towards the close. And then we essentially closed at around 437.89, right? So ideally, what I really wanted to happen was a retest of 435 to 436 so that we can have like a healthier pullback before we really start to skyrocket upwards. So that would look something like this. We would, consolidate a bit, come back down, and then go on higher. But if we closed above 438.20, all bets would be off and we would just go straight to the moon. So now personally, we could, this is just a day-to-day things, because currently we know that the Fed had pretty bullish news. That's why the Fed, Jerome Powell, when he gave the speech today in Congress, his testimony, it's very bullish. That's why the market closed so bullishly, and we're green, obviously, right? And we know, Russia is not going to be using nuclear weapons. So that's another reason why the market is green at the moment. But in the short term, what could end up happening is we could come back and retest these two support levels that we keep on talking about. Specifically this 434.74 level. And in the grand scheme of things, that would still be very, very bullish for the overall market. But it wouldn't be bullish for our call. So just be aware of that, and just assume that you're probably going to lose some money overnight, because the healthiest thing for the market would be if we come back and fall. And that's probably what's going to end up happening, unfortunately. So I hope you guys still love me. Anyway, there's that for the SPY. I really do think that we could fall back lower. But again, I mean, all bets are off. This market is very, very unpredictable. We could continue going on higher. The upward level of resistance that's very, very important for the SPY is this 443.38 level and the 20 exponential moving average, approximately at 441. So, it makes sense. Those are the upward levels. Those are the downward levels. Overall, I'm still very bullish on the market. This is still a bull flag. And there's that for the SPY. So let's go ahead and take a look at the IWM. And actually, before we start going into this, before we start going into the SPY, the IWM, we need to look at this blue MACD line on the SPY. You can see that it is now starting to curl upwards. And that is good, because it's going to create a bullishness, and it's going to create like the overall momentum of this MACD to move on higher as well. And that's exactly what we need. So this is very, very good right now. And even if the SPY were to fall a bit lower again, in the grand scheme of things, as long as this MACD line continues to point upwards the way that it is, it's very, very good. So there's that for the SPY. Let's take a look at the IWM. All right, so here's a chart of the IWM. And I mean, honestly, how are you really not supposed to be bullish at this point? We closed above this trend line. We closed above this level right here at 203.75. And I mean, we closed above this prior high from yesterday. This is just a very, very bullish close. And you can also see the MACD is pointing upwards as well. It's starting to now curl up and force the yellow MACD line to move upwards as well, which is very, very bullish. So, when you see a setup like this, you have to take it. So if we do end up falling lower on the SPY, it is what it is. But when the IWM, because the IWM has been leading all throughout last month, really, and towards the end of this month, whenever we were really bullish, the IWM was the strongest. So you can see here right now, the IWM is clearly the most green today out of the major indices. And that's a good sign. So when the IWM is closing above resistance as well, that is a bullish sign. So we closed above these levels. Obviously, the support levels for tomorrow are going to be the prior levels of resistance. This 201.50 level is going to be support. And then 201 is going to be a retest of this downtrend line if we do fall back down. But ideally, what we now need for the IWM and the bullish case is a continuation on higher. And what's interesting is that the 50 simple moving average is in direct confluence with the upper level of the Bollinger Bands. So that is pretty interesting. And then tomorrow, this 207.43 level is basically going to be in confluence with the 50 simple moving average as well as the upper level of the Bollinger Band. So that's going to be really, really interesting to see if we can come back and retest that level tomorrow. But overall, you can see that this is also still a bull flag. And ideally, for us, since we're holding calls, it would be great if we continue on higher. But just keep in mind that the SPY could fall a bit lower before going on higher again. But that's why we have our stop losses, and it is what it is. So there's that for the IWM. Overall, still looks ridiculously bullish, just not as blindly, easily bullish. Just the SPY does not look as blindly, easily bullish as I would have liked it. All right, so there's that for the IWM. Let's talk about the large tech stocks, the 30-year bond, and the NASDAQ. All right, so here's Apple. Closed above the 10 simple moving average, closed above these prior candles here. And this is the first day that we're trading after the crossover on the MACD, so this is bullish. We could come back and retest 168.34 tomorrow. Overall, Apple looks very, very bullish. Let's take a look at Microsoft. And Microsoft also looks very, very bullish. We closed above the 200 simple moving average, the 20 exponential moving average, this 297.97, and above 300. So overall, Microsoft looks very, very bullish. As well as this MACD, it's continuing to curl on upwards, forcing the yellow MACD line's momentum to move upwards as well, which is really, really good. So now, 390 is going to be the next level of resistance, and then 305.65. But Microsoft and Apple look very bullish so far. Amazon has not yet even crossed above on the MACD, and it had a green day. But overall, it seems like a day of consolidation for Amazon. It didn't really have a huge breakaway, break above resistance or anything. But this is very, very bullish here. This still means that the MACD can still cross above and create huge upward momentum. So 31.20. So basically, it's showing that there's a lot more upward room to go, is what I'm saying. So 31.27 is the level of resistance to the upside for Amazon, and it looks like that can happen soon if this bull flag, continues. So there's that for Amazon. Let's take a look at Google. Google had another day of sort of consolidation. We had a green day today. The MACD line is continuing to move on upwards, as we can see here, and the longer we continue upwards, the higher chance that it's going to start curling this yellow MACD line upwards as well, which is going to force the overall momentum to go on higher as well. So you can see that 27.50 is going to be like a major level of resistance for Google. But overall, green day, held above support, across the board for all of these tech stocks. Let's take a look at Tesla. Tesla had a green day. We closed above the 20 exponential moving average. We held a support at the 10 and the 200, basically, and we can see that the MACD is now starting to really curl upwards as well here. And this will force the yellow MACD line once again to start moving upwards as well. We have a major level of resistance at 900 and at 925. So overall, all of these tech stocks are showing that there's still lots more room to the upside, which is good. So there's that for that. Let's take a look at the bonds. So these are the bonds. These aren't the yields. So these are the the bonds. So we obviously had a huge move upwards, and that huge move was very, very good. Even though we had a red day today, it started to curl the overall momentum of the bonds upwards. And that's what we needed to see. That's what we need to see, like on those large tech stocks that I was showing you in the overall market. So this is a very, very good sign. And even now, if we were to just start consolidating above 155, it would still be bullish. Even if we came back and retested the gap fill down here at 155.06, the fact that this yellow MACD line is now starting to move upwards, that is very, very good for tech stocks. Because when the bonds do well, the tech sector does well. All right. So just keep that in mind. The fact that this is happening right now is very, very good for the tech sector, in my opinion. And in the long term, most likely what's going to happening in March is we're going to have a 25 basis point increase in interest rates. And I think that should already be priced in. Like the market already basically knows. I mean, I'm not going to like blindly just be bullish for everything, right? But hedge funds and banks should already know that there's going to be approximately like 6 or 7 different interest rate hikes this year. So with that in mind, the bonds, obviously if people would not be trading the bonds if they were worried of the overall outlook of the economy, right? And of the markets. So the fact that this big pop happened was a really, really big signal, in my opinion, that the tech sector is starting to be like, it's starting to look like a really, really good buy. So, of course, one day at a time. This is still pretty new market conditions for everybody. So let's go ahead and just continue to see and just look at everything with an open mind. But the fact that this happened on the bonds, in my opinion, is a really, really good sign for the tech sector. And I guess we just have to see if that's the case. So there's that for the bonds. Let's take a look at the NASDAQ. All right, so here's the NASDAQ. So basically, you saw how the bonds, the yellow MACD line started to move upwards, right? That's essentially what we need to happen on the NASDAQ. So right now, you can see that we closed above all of these major closes on these candles, right? Ideally, what we would have liked to see was a close above 347.38. But we closed right below it at 347.22. So, it wasn't the cleanest. See, this is what I mean. Like the SPY and the NASDAQ did not close in the most obvious bullish way. And the fact that we didn't do that is giving me a bit of, concern overnight. That's why I think these might come back and fall down to 435 to 436. But if it goes up, that's great. So anyway, the downward supports are obviously going to be 345 and 343, and then back down to these this zone down here, 338 to 341. And then aside from that, really, the upward targets are going to be 350 and 353 and then 355. But this is overall looks very, very bullish in my opinion, regardless, only because the bonds had a huge move upwards and we're still holding up very, very well from the lows. And this is still a bull flag. We're still closing above multiple levels that we closed, the closes of previous days. And overall, this is, I mean, it's tough to say that we're going to fall back down to, 335 or anything really. The Fed was bullish today. Jerome Powell had bullish things to say really today. So until we see a tangible change in interest rates, which is going to be in this month's meeting for the Fed, then, we could chop around. We could, move down a bit, but I'm expecting us to continue moving on higher before the meeting. So there's that. I'm bullish heading into the meeting regardless, and we're going to see if that plays out. And hopefully this call that we're holding overnight works out as well. But worst case, we lose $60 a contract. So there's that. Anyway, there's that for the NASDAQ. There's that for the overall stock market. Now let's go ahead and take a look at the crypto market. All right, so here's Bitcoin. So we can clearly see that this is just begging for a bit of a retracement. And a healthy retracement would be back down to like 43,000. So you can see that when we do have like huge green candles like this, even if we are trading short term above this trend line here, it would make the most sense for us to come back, retest below, retest at 42,000 essentially, and then continue on higher. But again, this is a beautiful sign that the yellow MACD line is starting to move upwards. This blue MACD line is also moving upwards, and this RSI is showing lots of strength because like these past 2 days were very green, yet the RSI is basically stagnant, which is a very bullish sign in my opinion. But again, from a just trading perspective, a retest of this level here would be the most ideal situation for a bullish move back up. But of course, you know, anything could happen. We could just hold this trend line here. And then, you know, so 46.6 is going to be a very, 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 very important level of resistance for Bitcoin. If we can break above that, then that would mean, I think, the overall stock market is continuing to move on upwards as well. And that would be very, very bullish. So we are very, very close to that level. Just keep that in mind. 43,000, a retest of that level would still be pretty bullish. 42.5 even. But overall, you know, those are the levels to the downside. That's the level to the upside. Momentum is shifted to the upside. RSI is showing some strength. So overall, it looks pretty good as well. So there's that for the entire market. I hope you guys enjoyed the video, and definitely follow me on Twitter and have an amazing day. Thank you.